Quadrillions of dollars will be moving on chain over the course of the next couple years, and nobody is prepared for what is going to happen. Let's talk about it. Welcome to the channel, everyone. My name is Nick. For those that are new to the channel, hopefully by the end of this video, you become a subscriber. Back in April, the ISDA, the International Swaps and Derivatives Association, put out a Twitter post regarding Basel III. The US Basel III rules will result in an 80% increase to the cost of clearing at a time when firms are talking about liquidity risk. We've switched from counterparty credit risk to liquidity risk, and the Basel III rules are not going to help that. This is a very significant post because what this is telling us is that we need something to not only decrease the cost of clearing, but also even increase liquidity. And DLT stands at the forefront of disrupting the status quo and making efficient a lot of these markets that are running into roadblocks like liquidity or even cost. And now we really look at derivatives. Let's talk about this. Let's be honest, it's very easy to take positions in crypto, but it's extremely hard to actually have a game plan in place when the time comes to take profits. And that's exactly why I released a completely free exit plan that you can apply to literally every single position that you take in crypto. And the best part about it is that it's completely free. All you have to do to get access is go to the link down in the description below and claim your access now. What are you waiting for? Capture those profits. Here we have from the ISDA back in May of 2022, the future of derivatives markets, a roadmap for innovation. This entire document is just discussing how DLT can be embraced to really bring about an efficient derivatives market, but also even make efficient the entire clearing and settlement of derivatives as well. We have here from the CEO of the ISDA, it's now time to take a technology first approach to this challenge, and we have a plan to put that into action. And within this, right, we see the purpose of this paper is to provide a roadmap for participants in the derivatives industry who are working to implement new technology solutions and applications aimed at optimizing and digitizing financial markets over the next decade. This is very important to focus on because this is massive amounts of money. Now we have here that central clearing and certain products was introduced to decrease interconnectedness among market participants, reducing the cascading effects of a large institution's default with additional collateral requirements applied to the non-cleared segment of the market. Ultimately, they want to, completely make the entire derivatives market fully decentralized, meaning if one of these large institutions were to go belly up, all of a sudden you would have massive failures leading to a significant crash like '08. We want to completely avoid that, and the best way to do so is by ushering in new technology where we, completely cut off those middlemen and we ultimately decentralize the entire clearing infrastructure layer, if you will. Now we have the net effect of these new requirements has been profound and had impacted virtually every market segment and activity within the derivatives market. Firms have implemented new regulations at pace, layering complex new technologies on top of an antiquated infrastructure that is struggling to meet the new demands placed upon it. So even though we are starting to see these new technologies, and you could even throw Swift GPI into that mix, it's still on top of an antiquated infrastructure. The infrastructure itself needs to fully change. We need to upgrade the infrastructure. And we have here that the proliferation of paper-based contracts underpinning each of these new processes continues to cause issues for firms seeking to digitize and automate the contract generation and management process. And down here is where we do see that the next decade will be similarly transformational. The increasing maturity of DLT is likely to lead to widespread implementation across financial markets, and as such could provide common, consistent data representation and allow for real-time regulatory oversight of the market. The deployment of autonomous self-executing code or smart contracts built upon the data will allow for greater automation of systems and processes, the use of digital or tokenized assets, and the potential introduction of CBDCs in certain jurisdictions will transform the way existing financial markets operate through the introduction of real-time or intraday settlements, lower transaction and maintenance costs, and the promotion of greater and more cost-efficient access to financial products, and particularly when used in conjunction with smart contracts, greater automation of the front-to-end trade lifecycle. Now, although, these technologies are going to be embraced in a large way, there is still some challenges. For example, down here, so these are the two use cases that they're really looking at, but there is still things behind this technology that we still need answers to, like, for example, regulation, standardization, things like that. But here we have two big significant use cases. Number one is the use of DLT to simplify, standardize, and automate the regulatory reporting process, and the implementation of digital assets within collateral management systems to lower settlement times and reduce risk, aka have DLTs and digital assets settle all of these things, meaning derivatives. So all of the derivatives trades that are in the quadrillions will be settled through digital assets, or at least that's what they're looking at for a significant use case here. Now, here we have assessing the challenges and opportunities, and you can see some of these challenges and opportunities, for example, like regulatory mandates and compliance, commercial opportunities, efficiency savings, and continuation of current operations. Now, I don't want to go too in-depth on this document because I still have a lot of other information to go over, but the number one thing to really kind of conclude here, and if we go all the way down to the bottom to the conclusion, here we have this paper has identified transaction reporting and collateral management as compelling use cases for the deployment of innovative new technologies in the derivatives market. It has highlighted existing pain points and explained how technologies such as DLT and digital assets could help to overcome these by delivering greater efficiencies and cost savings. Finally, it has set out a series of practical steps market participants should take to implement these use cases. So the ISDA is ready. They are telling these major players to get ready. Now, this was back in May of 2022. We are now 2 years later, and it seems as though things are starting to heat up because of Basel III rules, for example, which is going to accelerate the adoption and implementation of DLT. Now, like I said, the ISDA is an absolute massive giant. They have over 1,000 member institutions from 77 countries, and they are pretty much the standardization player behind the derivatives market. We can actually see that they work in three areas: reducing counterparty credit risk, increasing transparency, and improving the industry's operational infrastructure. So they are focused on the infrastructure. So now let's look into a few things, right? Number one, the DTCC. This is just one name around securities transactions. They're also within, of course, derivatives. $3 quadrillion. In one single year, they processed over $3 quadrillion worth of securities transactions. And this has been growing rapidly. You can actually see 2021 versus 2022 and even 2023. And you can see their total revenue as well. Pretty substantial name. Now, as we do think about this, right? Just imagine how much money like this will be flowing over DLT. And we know that the DTCC is heavy in the DLT game. Now, as we go back to the ISDA, the number one reason that I want to focus on the ISDA heavily and the fact that we need new infrastructure, let's look at the names tied to the ISDA. First and foremost, Ripple. Ripple just recently joined the ISDA back in 2023. And this is a big one because, again, we're talking about new infrastructure. We're talking about settlement. We're talking about liquidity. And if we look at that, right, we know Ripple is fully focused on these key things and even tokenization. Now, beyond Ripple, we also know that Algorand back in 2020, Algorand and ISDA actually were working together on efficiency and market opportunity through asset tokenization and programmatic money. This is a big one as well because, again, we're talking more so about, CBDCs and, digital assets that are programmatic. But beyond that, Algorand is a key player. We know that Algorand is still a big player in the space, even though the price action says otherwise. Everyone is still focused on those prices. Guys, focus on the fundamentals because long term, the prices right now do not matter. We're still tied to Bitcoin. We're still tied to hype. We're still tied to speculation. As we look at the long-term path here, utility will reign supreme long term. But outside of this, let's go over to Archix, right? Because now as we look at ISDA and we look at these two players, in my opinion, Hedera and Stellar are two other players that we need to mention that will very well probably be a part of the ISDA at some point in time. Here we recently added Hedera and Algo to the list of protocols that our custody solutions can support, with more coming soon. Our solution offers secure insolvency remote storage with access to money market funds and crypto staking, and this is all through Archix. We also know that Stellar is absolutely killing the tokenization space as well, with over 533 million plus in terms of total supply of tokenized real world assets as of Q1 of this year, 1.6 billion in relevant real world asset transaction volume in Q1 of this year, and over 125 million total payments. Stellar is an absolute giant in the tokenization space that I do think that needs to be mentioned. Now, also, what's funny about Stellar and what's funny about Hedera, Algo, and even Ripple is that these are like the main ones that everyone is really kind of ignoring right now, even though you should be fully focused on them. And also more recently, I do have to bring up Archix with Ripple, with Medico, with Hedera, and even Aberdeen, because all of these are connected with Archix, and this is fully focused on institutional grade multi-asset segregated insolvency structure. And you can actually see on this list that securities are mentioned. You have crypto with IBM, you have Crest Cash, banks, pretty much anything that you can think of is on here, and that core infrastructure is labeled on here in terms of the full breakdown with insolvency, remote, custody, and even client access. And this is a very big deal. Now listen closely to this. I know that I included it in a recent video, but I'm bringing it back up because it is very important to listen to.
Here you really see a deeper dive into what our institutional grade structure looks like. And this is really how we hold these multiple types of assets. So nominee trust structure for securities, and then in terms of security on the digital side, we have a security segregated solution delivered in partnership with Medico and IBM. We've multi-sig process in place for withdrawals. We also have CAS permissions in place, and so for securities and cash, which is demonstrated here by the flow that you see in front of you. This is really an important differentiator for Archix. And as we face off against institutional players, what they really want to see is institutional grade regulated entities. Segregation of assets, how they're held and by whom they're held, is absolutely paramount. It's a key differentiator for us, and that has to be across multiple assets, both traditional and digital.
Now, do you hear what she just said? The segregation of these assets, these these things that they're holding, it goes all the way back to what we heard from the ISDA here, where we're really kind of looking at avoiding this cascading effect when just one large institution defaults. That's because when we look at what they are holding a very large percentage of reserves or whatever the case may be that could ultimately snowball into a much larger crisis. So as we look at this, right, even when it comes to derivatives, whatever the case may be, it could be securities, transactions, it doesn't matter, right? It all needs to be segregated. We all need to make sure that we can see everything. Everything has to be 100% transparent, and that's where these new infrastructures come into place. I look at Archix with how they're expanding rapidly with Ripple, Hedera, even Algo, all of these big players, and I do believe that at some point in time, maybe Stellar will be tied to Archix. I don't know if that will be, the thing, but if it is, that's going to be a big deal. We look at these big players, and it seems as though we're starting to see the new infrastructure rising around the financial space. And over here, again, big shout to Subjective Views, a blockchain central securities depository, Montes Group. We have a subsidiary called Montes, which is getting regulated as a central securities depository, which then allows digital instruments to realize their full potential. This is a big deal, and this is coming from the CMO at Archix. And Montes Group is a subsidiary of Archix, focuses on building digitally native post-trade infrastructure, blockchain agnostic. They are able to plug into XRP Ledger, Hedera, Algo, Tezos, Ethereum, Corda, Polygon, even Stellar, any network out there. Archix parent company of Montes Group, partnered with Medico for digital asset custody and orchestration. Ripple and Medico provides custody and orchestration services for institutional clients, partnered with Archix to enable tokenization on the XRP ledger. And we also know that Hedera is tapped in as well. Listen closely to this video, and then I will really kind of fully wrap things up.
You mentioned Simon. Does anyone else want to kind of add to that commercial viability?
Well, yeah, I'll build on what Usman was saying. You know, I think he said. I think there are a few things, and I think maybe crypto isn't as dirty a world as it was, but there's still plenty of people I meet who, you mentioned Bitcoin, they think drug dealers, money laundering. There is still education that needs to take place. You know, the market as a whole doesn't understand tokenization of digital assets and what they really are. So there is education, and that has hampered progress. I think there is the real case that there were lots of people doing proof of concepts. Now there are real projects happening, which is showing progress. The fact that people like Standard Chartered, Aberdeen Asset Management are involved in firms like ours is a sign of progress too. Everything that's happened with BlackRock is progress as well. But I also agree with the financial use case. These things need to demonstrate value. And actually, you know, the tokenization use cases are all hugely exciting. But I think the real benefit is post-trade. I mean, you know, we have a subsidiary called Montes, which is getting regulated as a central security depository, a blockchain-based central security depository, which kind of then allows sort of digital instruments to realize their full potential. And, you know, the firms we're talking to, these are not our figures, these are their figures. You know, they're looking at efficiency gains of 50, 60, even 70% in post-trade. Now, that kind of thing is what gets banks and the institutions excited, and tokenization is needed for that to happen, but there's real potential there, I think.
So I'm going to move through a little bit more in terms of our future vision. You can draw it up whichever way. There is a key role for a CSD, but you can take the C away. We are the securities depository. We are transferring ownership. We are giving that legal certainty. But we're starting with financial markets, and then naturally you could see in due course, you could have a non-financial market settlement securities depository. So that's how we see things developing. In terms of move up a level, we actually get to a point whereby we have a single ledger, which is the Montes ledger, sitting there, and it detects if JP Morgan has been using Onyx and someone else, HSBC has been using Orion, or Citi have used Polygon or whatever else, we detect the state change, and that simply updates our record. You no longer have the batch systems. You no longer have to send information out. We detect the state change, we change the ownership. And that's the world we see it moving to. The technical capability and financial capability is there to do it, and the innovation probably take the law and the regulators and so on, I would say 5, 6, 7 years to be comfortable with us operating in that way, but we can already do it.
So you guys have it. And again, you know, I want to just play this video clip real quick. I want to go back here because this is where you truly see the entire infrastructure layer really kind of mapped out, where you have DeFi on the bottom, you have the Montes digital CSO, transfer of ownership, you have custody, which is digital and traditional staking and yields, you have the secondary markets, exchange and OTC, primary market, digital and traditional, tokenization, multi-chain support at the top. And you can see on the left side, you have those tokenized bonds, funds, ETFs, equity, structured products, native and non-native digital securities. Again, all around securities, conventional securities, crypto itself, stablecoins, deposit tokens, tokenized money market funds, central bank digital currencies. Then on the right side, you have investment banks, asset managers, hedge funds, market makers, liquidity providers, family offices, sophisticated investors, brokers, and even retail. Guys, this is extremely, extremely bullish. Here you have the full breakdown. Venue, participant and technology agnostic in a regulated environment. You have Montes at the center point. You have Algo there, Ethereum, Hedera. Like, this is an absolute game changer. And it just goes to show you that we are witnessing the rise of the new financial infrastructure layers really kind of becoming a big deal. And Archix is definitely a name that you want to focus on. Just recently, they were named in a list on Forbes, and its financial institutions lead the way with tokenized real-world assets. Guys, they're named in a list with JP Morgan, BNY Mellon, Standard Chartered, BlackRock, Invesco, UBS, BNP Paribas, Deutsche Bank, Goldman Sachs, State Street, Societe Generale. Guys, these are massive names. MasterCard, Citi, I mean, come on. But regardless, right, it's not about just names on a board. It's talking more so about, you know, where we're headed. What's happening behind the scenes right now? The amount of pressure that's on the traditional world to truly embrace DLT is just getting even heavier and heavier and heavier. And back in April, this post by the ISDA is really kind of proof of that. As more and more standards like these rules around Basel III, like these are going to set ablaze a path towards accelerating the adoption of DLT and blockchain-based technologies. And I think everyone needs to focus on this. Not only is it going to put a lot of pressure on, just clearing and settlement, it's going to put a lot of pressure on banks as well. I think that this is going to push us into, a full-on digital financial system. And I've talked about this on multiple occasions, and the new leaders will rise. And in my opinion, a lot of them are being handpicked. You just have to look and, continue to see the connections being forged here. It seems as though, the leaders are already well known. The problem is that retail doesn't want to touch them, because for so long, what we've been hearing about when it comes to these assets is, oh, utility doesn't matter. Utility is worthless. Go invest into dog, cat, X, Y, and Z meme coin. Like, it's just comical to me that we're kind of being force-fed garbage right now, because in the short term, oh, these assets might not reach, $100 and do a 100x like these meme coins could potentially do. So in my opinion, as we really look at this space, I'm still focused on fundamentals. I'm still focused on utility, because, over the course of the next couple years, and, as these cycles come and go, utility will continue to get closer and closer to realizing in its true value for these assets. And at that point in time, I don't think that we're going to be looking at charts. I don't think that we're even going to care about what the chart is doing. So with that being said, I hope that you guys enjoyed this video. If you guys did, definitely leave a like, subscribe, turn notifications on because more free content. You guys are more than welcome to follow me on Twitter and join the free Discord down in the description below. And with that being said, guys, it's been Nick. Thanks for watching. Peace out.